They say technology makes our lives easier. For work, to learn, to travel, to communicate. But there are things that machines cannot yet do. Things as important as engaging, putting themselves in your shoes, having intuition, or making intelligent decisions. In an increasingly technological world, we need professionals who provide intelligent solutions based on their know-how. Because there are things that technology cannot yet do for you. The human tech.
Good afternoon, everyone. Well, thank you very much for joining us today on the 7th of May, 2025. Today, we're going to talk about property tax. Obviously, we are in the tax season, and many of you have questions about lodging your income tax return as a resident, as a non-resident. But in general, most of you have property in Spain and might have questions about how to do it while you're a no tax resident. How does it affect you as a tax resident? How about buying a property in Spain and what taxes and implications has VAT, transfer tax, stamp duty tax, even wealth tax to talk and consider. And then we will talk about buying a property in Spain, independent conveyancing, dealing with all these taxes, including IBI, which is in this region SUMA. Michael's region is IBI, state town hall tax. And I've got here today with myself, Michael Davies. Hello, Michael.
Hi, Ignacio. Nice to speak to you again.
Afternoon. We're getting back on track here, yeah?
Absolutely.
We're waiting for Pedro. Pedro is driving from Heredia straight, and he's going to join us now in a minute. Now, I'm going to ask the audience where are they contacting us from and what kind of questions they might have. Please start sending us your questions today, and Michael and myself will be able to answer as much as we have within this hour of our time, okay? This webinar will last just an hour, and if you need, Michael, if you could please share your email address as well, and website, just in case they might go back to you and do a video call with you. Okay. Now, starting to talk about the key topics today, right? Most of you might ask, Ignacio, when do I supposed to be tax resident in Spain? Well, this is part of the relocation project when you come over from a different country and you come over to Spain. In general terms, and you could double check with the dual taxation treaty your country has, and we do have, and you need to spend on a calendar year more than 183 days. In general terms, okay, there is more rules about the center of economic of interest as well. If you have two properties, you just travel pretty much the same amount of time in abroad or here, and you have two properties, well, there are rules, the Article 3 of the treaty in the UK, but it's very similar in the United States and very similar in different many countries. And you could download it from the website as well, dual taxation treaty between Spain and your home country. That's why it's important for you to tell us where are you contacting us from, so we could just pin down your specific situation. Right, I'm going to just try to, I don't know, Michael, if you would like to start talking about the non-resident tax, how does it affect non-resident tax, and if they have property in Spain, and then we could jump on, if they decide to become tax resident in Spain, jump into the conveyancing side and talk about the wealth tax. Okay, Michael, would you like to take it over and start over with that?
Yeah, fine. Okay, so I'm Michael Davies. I'm a Spanish lawyer. We're based down in Andalusia. Ignacio and Pedro are obviously up in the Valencia region. Our firm's called Davies Solicitors. Okay, so I think so that we have a full picture, shall I take us through the expenses when you put the taxes when you purchase the property in Spain, and then what your annual expenses are after? So that people have a sort of full view of what to expect. Does that make sense to you, Ignacio?
Yeah, Michael, let's try to drive. Let's put yourself and myself into a situation where we are deciding you are a non-resident, we're trying to buy a property in Spain.
Absolutely.
And then we jump into the resident.
Okay, so I'm going to take you through the starting point of when you're about to buy a property in Spain. I'm going to explain the taxes and fees involved in that process. And then after you've purchased, most people at the beginning are non-residents and at some point turn themselves into residents. So I'm going to go through the purchase expenses, taxes and fees, and then basically what your situation would be if you remained a non-resident tax-wise, and then Ignacio's going to explain the part there's a lot more involved, which is when you actually become a resident. So I'll do the purchase and the non-resident, Ignacio, and then you do all the resident part, because so they're roughly the same length.
Perfect.
Okay. So if you're purchasing a property in Spain, the main tax that you'll have to deal with is going to be transfer tax if you buy a second-hand property, or you're going to have to deal with VAT plus document tax if it is a new property. So there's a slight difference if you buy in Andalusia or if you buy in the Valencia region. I don't think it's enough to basically make the decision of where to buy, but just to be aware of it. So in Andalusia, if you buy a second-hand property, you're going to pay 7% transfer tax. Up in the Valencia region, for the moment, and unless Ignacio corrects me, I think you're going to pay a 10% transfer tax. If the property you buy is new, then in Andalusia, you don't pay transfer tax, you'll pay VAT at 10%, and then you'll pay an additional 1.2 document tax. And in the Valencia region, the VAT would be the same, 10%, and then you add on 1.5%, so 1% document tax. So on the purchase, in addition to those taxes, which will be transfer tax or VAT, depending, you'll also pay a notary fee, which we're going to work on a property of around 250,000 euro, because I think that's sort of, average, maybe purchase price. But you'll have a notary fee, which will be very similar to the fee in Valencia region, around the €1,000 mark. You'll have a registrar's fee of around 600 or 700 euro. You'll have a solicitor's fee. This can vary a bit more than the notary and registrar's fee, depending on the solicitor you choose. Most solicitors charge around 1% plus VAT, but lots of them, including us, have a minimum fee. In our particular case, our minimum fee on conveyancing is €3,500 plus VAT. That's at the moment, 2025. So basically, if you purchase a property that's above €350,000, I'm going to charge you 1% plus VAT. If it's less, I'll charge you the 3,500 plus VAT. This can vary a bit from solicitor to solicitor. What I always say is the important thing is just to ask for a budget in writing to make sure that at the end, nobody charges you more than what they say they're going to charge. Whether someone's expensive or cheap depends on everything's depends on the service and things. We reckon we've got it about right. So we said notary. So you've got the transfer tax, the notary, the registrar fee, and the solicitor's fee. I always say that if you buy a property in Spain, also at the same time, get the solicitor to organise some Spanish wills for you to cover Spanish assets. I'm a specialist in inheritance. So I've got no doubt whatsoever that when everyone that buys a property in Spain should make a simple Spanish will. They can do it with the lawyer that handled the conveyance, there's no problem, or come to somebody like that, but get the will done. Most lawyers will charge 250 or 300 euro plus VAT to make a Spanish will, and you'll pay a notary around 90 euro to witness each one and get it registered. So basically, it's kind of a long story short. It's probably correct to say that if you buy a 250,000 euro property in Andalusia, you'll pay about 10% in taxes and fees, and in the Valencia region, you'll pay a little bit more because of the increased transfer tax. So I think with that, Ignacio, I don't think I've forgotten anything regarding the expenses on the purchase. Hi, Ignacio. Sorry, Pedro. With that, I think we've covered the taxes and fees on the original purchase. There could be some small variations in specific cases because both the Valencia region and Andalusia have specially reduced transfer tax rates for certain specific situations, and we won't go into that. Most of the expats that buy property do not fall in any of these categories that allow the reduced transfer tax, but it's always worth just asking the lawyer that's handling. Some of them are quite local, some of these reduced rates. So that's
Michael. Could you please mention as well before we move on, non-resident tax, once they buy our property,
Yes.
what obligations do they have?
Yes, yes.
as
So
the
absolutely,
owners?
absolutely. So now that you've purchased your property, most people at the beginning at least will be non-residents. And if not, in any case, Ignacio's going to explain what happens as residents. So as non-residents, basically once you've purchased the property, you need to make sure that the lawyer that handled the conveyance has basically set up by direct debit electricity, water, rates, rubbish, cumulative owners, and you need to make sure you've got a home insurance set up on your bank. That's basically what you need to have set up. Now, in addition to that, your only obligation as a non-resident will be that once a year, you've got to pay what's called non-resident imputed income tax. So it's quite difficult to understand for some people because they think, well, how could be non-resident imputed income tax? There is no income. How could there be any tax? Well, they do tax you. In fact, Spanish residents and Spanish people also pay this tax on everything but your main home. So obviously, this is not your main home, and that's why you pay the imputed income tax. So basically, what do they do? Well, they take the catastral value, which is of the value that appears on your rates receipt. And it's normally quite a bit lower than the market price. And basically what they do is they consider that your income is 1.1% or 2%, depending on when it was last revised, of that catastral value. And then they tax you at 24.75%. So basically, I mean, what we're talking about is if you have a property that's worth 250,000 euro with certain margin for error, you'll be paying maybe 300 or 400 euro in tax. But unfortunately, it is not a tax that you can just set up by direct debit. You actually need to present a form each year. It's called 210, and you present it always 1 year in arrears. So you can either use the lawyer that handled the conveyance for you originally, or I mean, you could try and do it yourself. Some people do, but I think it's a good idea to have someone file it for you because it means then you've also got someone that can take care of your tax affairs in Spain if anything goes wrong. And if the taxman has to write to you, they can write to him, and that gives you peace of mind. If in the UK, the Spanish taxman writes to you, it can be a problem. In addition to this, there could be, depending on the region where you live, there could also be wealth tax. So you have a property that's worth more than 700,000 euro, you could have an obligation to pay wealth tax. In Andalusia, it doesn't exist yet. In the Valencia region, I think in Ignacio, it still exists at the moment.
It still exists, yeah.
It looks like it's on its way out, but at the moment, we still got it.
It should.
Yeah, and in addition to this, and we're really going to the margins now, if your house in Spain is worth more than 3 million euro and it's in one name, there's also a tax called the solidarity tax that you'd have to pay. But again, we're talking about only if you have a property worth more than 3 million euro or it's jointly owned, 6 million euro. Ignacio, I think for non-residents, which is, in other words, basically the conclusion is that for non-residents, the situation is tax-wise is relatively very straightforward and simple. And now Ignacio or Pedro are going to go into all the detail of the situation regarding being a resident in Spain and what tax obligations that would you would have.
Michael, before we go, what about if they're renting out the property as a non-tax resident?
Okay, good question. Yes. Okay. So that situation there, thank you, Ignacio, for pointing that out. That situation that I've explained there is if you have your property as a non-resident and you don't rent it out. Now, if you do rent it out, then what has to happen is regarding the time that it's actually been rented out, you do have to actually declare those rentals and declare the income. Now, if you are a non-resident and resident in the EU, you can then deduct from the income from those rentals the expenses that you have on having the property in Spain. If you are a non-resident but non-resident of and are not resident in an EU country, for example, the British, we unfortunately now cannot deduct the expenses that we have on the property, and we have to pay the tax on the gross amount of the rentals. And for those that may be thinking, well, what happens with that non-resident tax that you mentioned before? Very simple. Taxman taxes every day of the year. So if basically you've rented it out 100 days a year, 100 days. For those 100 days, you're going to pay based on the real income. And then respect to the other days of ownership, you will pay the non-resident imputed income. And it's just basically a rule of three. And basically we work out what the corresponding amount of the non-resident imputed income tax would be corresponding to only those 265 days that it wasn't rented out. So you'd pay real tax on the real income with respect to the days that you rented it out, and respect to the other days you pay the non-resident imputed income tax, obviously reducing it proportionally because you're not counting all the days of the year.
Michael, if I am a non-tax resident and I sold my property, could you just roughly explain the process on the 3% retainer?
Absolutely.
3 months?
Yeah, good question.
Yeah,
perfect. So we've gone through what happens when you purchase, during the lifespan of your ownership, and when you go to sell the property, there are two taxes involved if you're a non-resident. Okay, so apart from the solicitor and the maybe the estate agent, you're going to have two taxes. The two taxes that we have to talk about are capital gains tax and plusvalia tax. The way it works if you're a non-resident selling a property in Spain regarding capital gains tax is the buyer is going to retain 3% of the sales price, pay it into the tax office within 30 days on behalf of your capital gains tax. Then you will need to go to a solicitor like Ignacio or ourselves to work out what the real capital gains tax is, and then either volunteer the difference or claim some money back. And you have to do that within 4 months of the completion. If at the end there's some money to come back, well, your lawyer will take power of attorney from you and make the claim, and you will get it back, even though it does take about 10 months. Then we have the issue of the plusvalia tax. The plusvalia tax is a local tax to the town hall. It's had a bit of a history lately because we had a plusvalia tax, then it was declared unconstitutional, and now we've got a new system which basically allows us two methods of calculation. And we've got to choose which is the cheapest one for you. And this is something that your lawyer that's handling the seller will need to do with care. In other words, they're called, as one is valores reales, and the other one is valores objetivos. It's a bit complicated to explain, but you just simply have to go to your lawyer that's handling the sale and say to him, look, don't just volunteer to pay the town hall whatever they choose. I want you to calculate it using both methods, and then on the title deed you request which method of calculation is the one that you have chosen. Plusvalia tax is normally not very large amounts, but exceptionally it can be.
Okay, that's very good, Michael. I think you did cover very well a path of a non-resident buying a property in Spain, even renting it out, and even selling it and moving forward. Okay, now we're going to talk. Please start sending us your questions, obviously with regards to what Michael explanation said. And now Pedro, he will cover a little bit the path once you are in Spain more than 183 days, or you wish to stay in Spain as a tax resident. If Pedro could tell us a little bit about buying a property in Spain or selling a property in Spain as a tax resident, a bit of a capital gain tax, a bit of renting it out, and then we could jump into wealth tax.
Ignacio, can I explain something very quickly about the non-resident selling? Because I see some questions there, and there's 2 or 3, so I think I need to clarify it.
Sure.
Okay, so Ignacio, when he goes through explanation of residents buying, living, and selling in Spain, we'll explain this also with some detail. But there are people asking me about, well, what happens if I'm over 65? Okay, the exemptions that exist for reinvestment, or the exemption that exists for sellers that are over 65 are only if you are only come into play if you are a resident in Spain, because there are exemptions that depend on the property being your main home, which you can never claim, of course, if you're a non-resident. It can't be your main home if you're a resident. There are people on the questions asking whether they can apply the exemption for the over 65s, etc. So for non-residents, no, there are no exemptions for reinvestment or for over 65s.
Okay, perfect. Pedro, would you like to take it over the path of a expat trying to, Michael already explained the path of they coming over, relocation, coming over to Spain, becoming a no-tax resident, buying a property in Spain, renting it out, selling it on, etc. Now, how about Pedro? If they decide to become tax resident, if you could give us a little bit the guidance of how does it work and how does it affect, and then we
Okay.
can start with questions.
Okay, let's start with that. Thank you, Ignacio and Michael. I apologize for being a little bit late today. Okay, well, when we have many, let's say, simulations or questions before people come to not just to buy, it's also to be resident in Spain. I understand it has been already explained about residence and non-resident, the general criteria to live more than 183 days in a calendar year from the 1st of January to 31st of December. So let's put an example as someone wants to become resident and in some way is going to become tax resident, maybe the same year that they become resident, or maybe the following year because they spend more than 183 days. So it could happen, and it happens, that people want to move at the same time they sell the property where they come from, their home country. And could happen like different scenarios. One of them is that those one who wants to move into Spain maybe are older than 65, and the property that are selling is the main home. Well, if they sell it and they come and do not spend more than 183 days, that's one of the key points. Well, there's nothing to do in Spain because they are non-residents, and so nothing about taxes to do in Spain, even though they became resident. Let's put an example. In October this year, they are non-resident for tax purposes. Even though they have authorization to be resident, they are residents, fully residents in Spain, let's say in October. Maybe they sold the property in September, in August, or maybe they sell the property in December the same year, this year, for example. But what if someone moves into Spain and becomes resident and still are waiting for sell the property abroad, the main home they left? Well, that's a specific situation, and it's already been explained in general, but let me put some examples on this. So if someone moves into Spain and is older than 65 and the property is a main home, well, it's in some way could be exempt, but if the property is not sold after 2 years or before 2 years of moving into Spain, so they have like a window of 2 years to sell a property, and that will have the benefit to be included with these two conditions: older than 65, and it belongs to the concept of main home. So if someone comes to Spain and the property is sold during that time, well, perfect. If it's sold after those 2 years is moved, then we have to be paid capital gains for sure. And there is some other option. Another example is someone is not older than 65, sells a property, and well, the example is if you stay more than 180 days, perfect, then you will have to declare worldwide income in Spain because you are tax resident, and for that reason, you have to declare capital gains. Capital gains involves any gain that you may have selling the property before. This is an example, maybe it's a little bit complex to explain, but what I want to just to understand is that it's important to plan. If you are going to be resident, it is important to plan if you're going to sell or not. It's important to plan if it's your main home or not, in order to see the scenario, or maybe when you're going to transmit properties and get some gain, to plan if you're going to be paying more taxes, less taxes, how to reinvest. Obviously, there is a possibility of a main home. If you reinvest in the following 2 years, well, that's a possibility in order to reinvest what you sold, the gain, the total amount, in order to reinvest. If someone has obviously questions on that, that's perfect. Well, so when someone buys a property, that has been explained, I understand, by Michael as well, in the Comunidad Valenciana, this is where I am, where we are, in this region, is what could possibly, as it probably been explained, you could buy a property second, like a sale, like a used property, or a property which is new. If it's a property which is already used, is not new, then the general tax to pay is 10%. That is a 10%. The sum is slightly increased when properties are over 1 million euros, but let's say 10%. So adding when you agree a property is going to be say, okay, well, perfect, it's 500,000 euros. Well, it's 50,000 euros tax, 50,000 euros tax, so it's 10%. And then you need to add notary cost, property registry cost. Then you need to add lawyers' fees, and maybe some other like management fees, or in order to cover all the services. Normally, what we say in Comunidad Valenciana, in region Valencia, which covers Castellón, Provincia Valencia, Province Alicante, we normally say, okay, the cost wise, it will be around, let's say, around 11.50, sometimes 12%, depends on the value, and obviously all depending on the range of fees that your lawyer may charge. But think about 11.5 and 12% above the property price when you buy. And if you buy a new property, then normally the property, when it's sold, there are some developers that they include on the commercial and the marketing, they include a total price with the value tax included. It is like if you buy like a mobile, for example, and in Spain, it is already included a value added tax. And sometimes happens that developers, they say, okay, the value of the property is, or the sale of a property is 200,000 euros. But they sometimes, because in order to attract, it's not included this 10% value tax. It's exactly the same tax. Well, it's not exactly the same tax. About the principal tax to be taxed is the same one, 10%, on the price of the property. But it's important to see the trick about when the developer attracts you to see the property, if it's included or not. And then it will be another tax, we call it a stamp tax. It's called in Spanish actos jurídicos documentados, which is 1.5 in general, 1.5. So adding this 10% for new properties, 10% plus 1.5 plus notary, property registry, and lawyers' fees, well, it could be increased. In this case, around 13%, more or less 13% tax over the base of the price that you have agreed. And that is the tax in order to buy properties. Sometimes with second sale properties, people agree, okay, well, there's a lot of furniture in the property, a lot of issues on the property that I want to, maybe the seller or the buyer, they want to divide in, say, a different agreement on this. It's not part of the property because they may, well, that has a different tax rate. It's really 6%, but it's a rate that we always say to the clients, I mean, it's something that must be paid. It's something that must be paid because we see agencies that they agree about this, about that. Okay, perfect. At the end, whatever you buy on the property, or if it's furniture, you have to pay the taxes, 10%, 6%, whatever it is, but you need to pay. And obviously, evaluate it accordingly, because evaluation, it must be done in a correct way. There are some minimum of valuations, and it will be the same if you buy with a company. Okay, I'm gonna buy with my company. I understand that I'm gonna pay less taxes because I buy with a company. Well, that's not true. You will be paying as well the 10% value tax, the stamp tax, and you will be paying as well the 10% transmission tax buying the property, even though it's a company in Spain or a company in outside of Spain. It's different in case that you are buying something that could be used as a commercial, and the seller is a commercial, the seller is a developer, the seller is a company that has an activity. Well, that changed. That may be able to change the figures and maybe it's transmission tax, but then you change into a value tax, which is exempt, and then you pay a general rate of 2%, for example. But that's a different issue. Again, on general, is this 600,000 transmission on properties that are in Spain every year. In general, they pay the regional tax. In Andalusia, it's different. In Valencia, it's 10%. And that's the key point. What happens when you buy? Well, you may sell it in the future. Well, if it's your main home, a main home, it means that you belongs to you at least 3 years that you have been living in that property as a resident in that property. Then it means that you will be able to sell it, and if you get a gain, if you have to pay capital gains tax, except in case that you reinvest the property, the sale, the price that you got from the sale. if you reinvest the price that you got from the sale, then you do not have to pay capital gains tax. This is a general rule, obviously. And we may enter in some specific details anyway. And what if I buy the property and I live in the property and in Spain, I'm resident in Spain, and then I come up to 65 years old and I've been living in the property more than 3 years, it's my main home, and I sell it? Well, no tax to pay. Will be exempt, nothing to pay. Okay. I understand a little bit complicated about these exemptions and this, that, but obviously to buy properties, obviously there is a big tax to pay. Be sure that whenever you buy a new property, whenever the developer attracts you to buy or not to buy, if it's the value tax included, because I personally have sometimes doubts and questions about that. And obviously be sure that what is going to be the final amount on cost, not just the price of the property, the total cost about the purchase, but obviously that you are appropriate in order to buy a property. Obviously, there is a loans, mortgage, banks, and then they will be able to give you some money in order to help you on buying a property. But it's important to see in the scenario, okay, this is the purchase price, and this is the cost of a purchase, which sometimes it could be like 50%, which is a lot. Anyway. Okay, just to start, Ignacio, and I don't know if there are questions on here right now.
Okay, that's very good, Pedro. As we said, we did cover you being a non-tax resident, then changing over in a calendar year as a tax resident. For those of you who are relocating to Spain, it's very important to do tax planning, because you could save a lot of money doing things properly instead of just jumping over and starting to withdraw money and selling your property after you being out of the country for 2 years. So be careful, because we're talking about a lot of money. Now, Pedro, I don't know if you did mention as well a little bit about the wealth tax. Do you cover that? I did share a lot of articles for those of you who probably joined late, and you might be willing to read, because obviously
rapidly, obviously in Andalusia, which is fantastic, there is no wealth tax. We were going to, in this region, eliminate it, but it didn't, and I don't think it's going to happen in the following years. But just rapidly, if you are resident in Spain, at the end you have to declare worldwide income, but at the same time you have to declare worldwide assets on its value, in case that the value of the properties that you hold is over 500,000 euros. And what it covers this wealth tax, I mean, if you individually, personally, if your value of your assets are over 500,000 euros, then it will be on a scale to be charged on your assets. So just because you own your assets, it will be some charge on that. And it is not included. Well, it's not included. Some limits. It is included the property that you live, your main home, but it's exempt up to 300,000 euros. In case, for example, you have a property that you own and is 500,000 euros with your husband or wife, and so you are entitled of really, let's say 50%, 250,000 euros. That will not be part of the wealth tax. That will not be part of the wealth tax. There are so many questions about products or financial products or 401k from the US citizens, or some other ones from, for example, from North Europe. This is included or not, some pension plans, some SIPP, or some issues that there are some rules in the Spanish tax office on terms of wealth and insurance and pensions that there is some dispute and there is some recognition on this, but mostly they are not recognized. So mostly, and this is something that has to be checked carefully and specifically, some of them can be included, should be included in, some of them should be included in the wealth tax valuation. What is valuation really? Is a value at the end of a year, and if it's a property, is what is the purchase price, the price when you bought the property. And this is if you are resident. If you are non-resident, then the figures change. Is just for the assets that you hold in Spain, in the territory of Spain. You are the owner of that, and if the value of purchase price when you bought in this case a property, if it's over 700,000 euros, then there will be a scale in terms of charging you some tax specifically on this. Imagine that you have a 2 million property, 2 million purchase price property. You are owner to spouses. Well, 1,400,000 euros will be exempt, and the other 600,000 euros will be individually 300,000 euros one of the spouse, and 300,000 euros one of the other spouse. Then that will be the base in order to be taxed. Maybe it will be some hundreds of euros, little, but obviously if this increase, it will be go up and up. Apart from wealth tax in those regions that they are not wealth tax, like say Madrid and Andalusia and some other regions, there are some issues, some compensations, let's say that. There is another tax called solidarity tax, but it starts from 3.7 million euros in tax. So, but wealth tax applies to non-resident. Yes, if the properties that you have in Spain are in this case over 700,000 euros individually, always individually.
Okay, Pedro, shall we start with a few bits and pieces with questions? Michael, would you like to take one? Have the microphone on, Michael.
I should know better after the hundreds of webinars we've done. Okay. One question. I can't remember. Pedro, did you cover the 720 form?
I didn't. It's something that I was thinking about that when I was speaking, but yes, let's do it, Michael.
So you want to cover that? I think because that it's not a tax payment, but it is an obligation for the residents. So
sure.
Is it? Well, I mean, I'll say. Okay, when you become resident, I will recover again from the beginning. When you become resident, maybe that year, let's say 2025, someone becomes resident today, 7th of May, and this year is gonna spend more than 183 days. So this year, 2025, will be not just resident, also tax resident. Being tax resident is not a faculty; it's an obligation in case that you fulfill some requirements. And one of them is that you spend more than 183 days in a calendar year. So if that is the case, then the following year and the period of time to make the submission of the information, and I will explain which is the information, needs to be done from the 1st of January to 31st of March. What do you need? What do you have? What is the obligation you to declare to the tax office in Spain? Well, you have to declare your assets outside Spain. It is an informative declaration, not to pay taxes. It is an informative declaration. You have to declare your worldwide assets outside Spain that are valued over 50,000 euros in the same, let's say, pillars. Let's say one pillar is bank accounts, the other pillar is investments in life insurance, and the other pillar is property, real estate. So if real estate is, when you bought a property in real estate in UK or in Norway or in the US, is more than 50,000 euros purchase price, then you need to declare. If the investment that you have at the end of a year, last year, in 2024, 31st of December 2024, or if it's like all the kind of investment like the last quarter is over 50,000 euros, you need to declare. And as well, if you have different bank accounts, like say one bank account, 20,000 euros, the other bank account, another 20,000 euros, and the other bank account, 7,000 euros, and the other one, 5, for example, and all of them together is more than 50,000 euros, you need to declare all of them, even though you have one bank account with €1, for example, all of them. Okay, so that declaration, it is important, as Michael said, because obviously this is connected with your assets outside, in order to, at the end, complement if you are resident or in Spain, you need to declare the wealth tax in that case. It's important, it's an informative declaration, it's an obligation in case that you have assets outside Spain in these 3 pillars, which is over 50,000 euros. And in case that you have some increase of more than 20,000 euros in each of the pillars, then you need to update. Or if you cancel a bank account, or if you whatever changes happen on that product, then you need to inform the tax office. It's an informative declaration. It's not to pay tax, but obviously it's I would say it's like a control application, a control information that at the end you give to the tax office.
Okay, Pedro, very good. Michael, do you want to cover something extra, or shall we start going through bits and pieces with questions?
Let's go for the questions.
Okay, Samantha is asking here, for a UK citizen paying taxes in the UK, renting out a private property in Spain for holiday rentals, where should the earning be declared, Spain or the UK? Well, technically, the property, as far as I understand, Samantha, is in Spain, right? So, as Michael and Pedro said, if you were considered a no tax resident, you will declare it here. If you were considered to be a tax resident in Spain, then you'll have to include it here. If the property was in the UK, that's something completely different. UK might tax you on the income tax return over there. And if you were a tax resident in Spain, you will declare it and offset the tax that you paid in the UK. Okay, I did share with you guys here an article about capital gain tax. Okay, but this is about income tax, either as a resident or as a non-tax resident. But just to summarize, Samantha, it really depends on the country where the property is. I think you mentioned it is a holiday home in Spain, but I guess you are a no tax resident. So this is what Michael has already explained, what the obligations you need to do. If by any reason you become tax resident, you will declare the income and the expenses as a resident in Spain on your annual income tax return. Remember, from the 1st of April to the 30th of June, every year in a calendar year, you do your income tax return as a resident and your wealth tax as a resident. As Michael said, in Andalusia, Madrid, and I think Balearic, you don't have the obligation with the wealth tax. With the wealth tax only applies if you fulfill certain requirements within certain thresholds, it's got to be done once you do the income tax return, you do the wealth tax. I did share with you as well here a list for you, a sliding scale for you to look through. When does it start paying wealth tax? And you have some allowance depending on your income. It might be a complex, but you have reductions of the wealth tax. Okay, but it is only applicable to certain scenarios. Okay, so I don't want to scare you with that. Obviously, for those of you, I guess that you don't pay wealth tax because you're in a different community, as Michael stated, you will need to face the solidarity tax. I will share it with you, the article, what it is, but it starts declaring over 3,700,000 because that's the allowance. But that's per person. Okay, so remember the non-resident tax, or for the wealth tax, or as a resident, is always considered per person. Okay, so you bought a property in joint names, you need to split it into two individual time sliding scale. Right. I think we did cover as well. Michael, you did cover as well about new constructions. You did cover the VAT.
Yeah, I've seen the question. Okay, so this person here said, do these fees apply to new construction direct from builder? Okay, so I'm not certain. Obviously, we went through quickly the difference in the taxation of a new and a second-hand property. So basically, very quickly, in Andalusia, second-hand, you pay transfer tax 7%. New from the builder, you pay VAT at 10% plus document tax 1.2. In the Valencia region, if it's second-hand, transfer tax at 10%. If it's new, 10% VAT plus 1.5% document tax. Now, because she mentions fees, I mentioned that the fees roughly, there's the notary, the registrar. We talk about property of 250,000. We said 1,000 for the notary, approximately 600 for the registrar, and roughly 1% plus VAT for the solicitor. As some solicitors have minimum fees on properties of low value. Now, when she says here, what about the fees? Are they the same? Okay, so the notary, the registrar, and the solicitor's fees, whether it's new or second hand, at least in my case, I charge the same, but if the property is under construction, then there is more work for the solicitor because we have to make sure that the insurance policies are issued on each stage payments, and there can be, I don't know how you work it up in the Valencia regions. I
Yeah,
don't handle purchases up
and
there.
will take more
Here
time. At the end, you
down,
say, yeah, exactly.
down in Andalusia, when people say to me, I'm buying from this builder, and they're just putting the foundations in, and it's a year and a half of construction, then I typically will charge more than the 1% plus VAT and our normal minimum. So it depends on who the builder is. If it looks someone that's going to cause me problems.
Exactly.
Sometimes we already know who the builders are. We've dealt with that, and we know there's not much of a problem. But if you buy under construction and it's just at the beginning of the construction, expect the solicitor to give you a budget that's higher than the 1% plus VAT. At least in our case, it would be like that.
Good. Okay, let's move on.
Okay.
That was the question from Joe. And Oliver is asking, what about people that sell in the UK and move to Spain? Can you tell people they need to avoid moving before August if living there for the full year? I think Oliver probably got it confused. Otherwise, they can be liable for capital gain tax. As Pedro said and Michael said, and we share an article about capital gain tax, either as a resident in Spain or as a no tax resident, right? As they explain, over 65 years, if you're selling your main property, that will be exempt, right? But that's for residents, right? And over 65%, over 65 years old, you don't have the problem about selling your main property and moving. If you want to reinvest it, fine. If you don't want to reinvest it, fine. Okay, resident or non-resident. If we're talking about below 65, Pedro did go through the minimum rules the tax office requires, which is you're living in the property more than 3 years and selling the property and reinvesting the money within the 2 years period from you relocating, okay, to be tax-free completely, right? Otherwise, if you just made a profit of 100 and you only reinvest 50,000, then the other 50 is taxable here, capital gain tax. Now, capital gain tax, as you said, Oliver, is only applicable for those of you who are tax resident in Spain. Okay, so it is important to read it through, and if you have questions, then we could talk through, or we could do a simulation. Right, more questions. I don't know if Michael wants to pick one or Pedro needs to pick one, but otherwise I will just move on.
I can see there is one by Ralph. Thank you, Ralph, for the question. What if a non-resident forms a Spanish company and buys a property through that? So it says, so in this case, the owner of the house is a Spanish company and therefore not non-resident. Well, if you form a Spanish company, obviously you have to incur in some costs of accountancy and taxes. And the taxes to pay on the property will be exactly the same. Just transmission tax, 10%, or value tax, it will be exactly the same. And because it's a company that you just hold a property, it's not an activity or company. There's nothing to do with that. So in these cases, I would say like 99% of the situations, on those cases, we always recommend to buy as a non-resident, always as a non-resident. It's okay. At the end, whenever you're going to sell, it will be, if you live in the European Union country, 19% capital gains, or if you stay in Spain, well, at the end, you will get a gain and you will pay. But it's create a company in Spain, or we have like many areas that has some, it was like successful people was doing buying properties with companies outside, and then they sell the shares outside of Spain. Well, that's tricky, but it's illegal if you don't pay taxes at the end. At the end, you have to pay taxes on buying the property. If you buy it personally, or you buy with a company, or you buy it through the shares of a company or someone else, unless some other criteria. But in general, those who have done that have done it incorrectly, and there are many situations. But using companies with properties, thinking that it's going to get some benefits, I would say in general, it's something that we try to avoid because it's nothing to do with that. There are some situations that, okay, that's perfect. It's good. You're going to invest in different properties. You're going to rent them. You're going to maybe have engage some company to manage, or maybe an employee. Well, that's different. That may change the situation on the picture. but we always try to avoid that about those thoughts of clients that want to buy properties with companies with no terms in this case.
Mm-hmm. Okay.
Yeah, I just something I like to say about that, because as you know, I handle lots of inheritance things, and we have detected the odd company that is actually selling basically abusing the worry about inheritance tax, and they are sort of selling these company structures to theoretically save inheritance tax, and they're being sold by non-solicitors, and you think, well, and sometimes clients have come to me and they've set this company up with these, with these people. They've put their property in Marbella in the company, and they sort of vaguely think that they're saving inheritance tax. And when I sort of go through it, and you actually get to the bottom, you think, well, what? There was absolutely no reason to. There's just no, and it's incredible. But I mean, I'm not talking about sometimes even people that are very well documented, and they're literally being sold something that is complex, and they simply think that because it's complex, it must be good. But you people really need to understand what it's actually achieving. I just sometimes feel it's amazing that people are actually doing this, but it's still happening. I don't know if you've ever seen a case up there, but there are 2 or 3 companies that are selling these. I'm not saying that every firm that recommends people set up companies to save inheritance, everything's wrong, because there could be some situations.
Yeah, exactly. It could be some situations.
Which it works right, but we have actually seen now quite a few cases where there is absolutely no logic behind what has been done, except for the firm that sold all this to make a lot of money on commissions and basically because later at the end of the day they're actually going to be needed to unravel this mess that they created. So it's
but funny enough, Michael, I'm sharing with you an article we wrote some time ago exactly about this specific case.
Okay.
Very interesting, and actually, and I know the company that probably, some of them, but there is a very popular one in the area. And actually, Michael, the way they were doing, people were living, so they were setting up the companies. They charge them to set up the company. They charge them to run the company, and obviously the maintenance fees, everything. So in the long run, Michael, is more expensive to have it that way than even pay inheritance tax, because now inheritance tax in Comunidad Valenciana, like in Andalusia, is pretty much zero here. So the end that you end up paying a big bill, and even having the danger of the tax office affecting you the situation, because you're living in a property or living in a property for free, which is the company. You're not paying rent to the company neither. And then you live in the hope that you're not going to pay inheritance taxes, you see. But here is an article, inheriting shares of a foreign company. And the tax office is being investigating these cases. And I think, Michael, my feeling is that there is less and less companies that they do that, because the tax money is strong now.
Luckily, and also the information is sort of more widely. I mean, years and years ago, we're talking about now, just how old I am, about 20 years ago,
20 years.
a power attorney for Abbey National Offshore, Abbey National Gibraltar, and we used to set up these structures, but this was many, many years ago when it did make sense. But now it's just we just see these crazy, because also, amongst other things, the inheritance tax used to be much higher, and you could get away with these things. But nowadays,
that's correct.
We've seen these setups where the final beneficiary is actually the grandchildren or the children. And here in Andalusia, the first €1 million is tax free for each of them, and then they get a 99% discount.
Exactly.
Yet they've set up this company now, and they've got their €2 million villa in Marbella. They're living in this villa that belongs to this company. They're not declaring any rental, and there's absolutely no benefit at the end for inheritance.
Exactly.
Anyway, you think, well, what on earth is going on? What on earth is going on? Yeah.
Right. Okay. Let's move on, because we're running out of time. Actually, here, Pedro, do you want to take this one about the Roth IRA for the Americans? Hello. How is that U.S. Roth IRA account tax in Spain tax free? In the U.S., is it treated as brokerage account and tax on capital gain tax. I don't know if you want to cover that, Pedro, because
Well, yeah,
we are
Roth IRA is
Sure.
will be included in this case in the wealth taxes. I mean, unless if you cover you increase the threshold, which is in this case in Valencia 500,000 euros, then they will be included in your worldwide asset if you become resident in Spain. If you become resident, you don't become resident, nothing to do with that. And well, in Valencia region, if your asset, this Roth IRA and the rest of the assets that you may have in the world, then will be counted as a wealth tax. Well, there is some other regions, as we've said, Madrid and Andalusia, that will not be counted. It will not be because it is already eliminated. But the answer is yes. It will be included. It will be included.
Pedro, what about IRA and 401k? It is excluded from the wealth tax?
Yeah, but one thing about the Roth IRA, and this is different about this, is about income tax. Roth IRA is a savings that you already have because you have already paid taxes on that. And the traditional IRA is like a pension that you have, you get some benefits in order to get them. So whenever you get some money from the traditional IRA, you pay taxes. And the Roth IRA is like an asset, it's different. It's an investment, it's an asset that you have. So that on the income tax terms is different. I understood the question was about wealth tax.
Yeah,
but
one question was about the Roth IRA. Is it treated as and tax on capital gain tax? Well, I think they got confused.
Okay.
But going to wealth tax, Pedro, what is included on the wealth tax? Traditional IRA is included. Roth IRA is included. 401k. Do you want to cover that?
Yeah, I mean, yes, basically what you were saying. I mean, it's included because of the law. I mean, I think it's going to change in the near future. But at this time, there is some law about insurance plan pensions that has some requirements into Europe. And those ones who do not cover those requirements will not be able to be counted as be treated as to be exempt in this case, to be not to be counted, because someone who has a pension plan in Spain do not count for the wealth tax in this case. But those ones in this case in the US or in the UK or some other countries that do not cover these conditions, and it's a very, very tricky, complex and very technical way on taxes, but it doesn't cover that, so it will have to be included, and there are some resolution by tax office that says that in this term. So unfortunately, it needs to be included, but we hope that in the near future will be changed.
I mean, what I always recommend here is for those of you who might have a worry, or not just a worry, a concern, the best thing to do is to do a simulation with a tax specialist. We're very used to do a video conference, and in the video conference is our accountant and ourselves. We just you send us the figures, and then we give you an exact figure, even though it's an estimation, a rough, but just a simulation of how much would it cost you if you decided to have this tax situation. And this is the best way for you to know how much you're going to pay. And as well, people are concerned about wealth tax, which I understand. But in the long run, if you do the numbers, obviously depending on the figures, you might think is not really affecting you specifically because it's split it between two people. Obviously, then you have the allowance of the 300,000 euros on your main property, and then you have, depending on communities, well, Andalusia has a big allowance, obviously, and Madrid. But let's put it in the worst case scenario: those communities who do not have these big allowances, we're not talking about a huge amount of money. We're talking about sometimes not a lot of money. And sometimes it's worth for you to know in your specific situation how much is going to cost you before you even make a move or make a decision. Okay, I really recommend you that, because that's peace of mind and it saves you money and stress. I mean, we're running out of time. Unfortunately, we're still having a lot of questions and questions. I don't know, Michael or Pedro, if you want to just pick the one that is quicker to answer.
Let me just rapidly answer some of them. It's Gregory. The answer is yes. Less than 180 days, you sold a property in the US. There's nothing to do in Spain because you're not a tax resident, even though you became resident in 2025. If you spend less than 183 days, nothing to do in Spain the following year, and then you will have to. Do non-resident pay capital gains tax? Yes, we have already covered that. You have a capital gain on a property, on a territory in Spain, then you will have to be not just property, any investment. You have in Spain, in the territory of Spain, as a non-resident. And we cover the growth area. And what else? But I think about Oliver, you already mentioned that. And Peter, is this the first year that the IBI is required for the income tax form? Javier. Well, the IBI, in our case, we apply for that document because we need to check up things about property, about if something is changed in the local council tax, and that we require that. We like to have that in the database as to take the tax reference, address, square meter. All that about the taxes, about the tax rules, intensity has changed or not on that. About income taxes
but Pedro, if they're living in the property, I don't know if it's their case, and they're doing the resident tax. If they're living in that property, they wouldn't pay tax as a resident
because
for that
we need to be informed. Sometimes the people have two properties, or maybe one council tax is for the garage, another one for the property, another one for maybe have a land, or maybe have two properties, and we need to see that what the information that is given in the tax office is the same that they gave us. So it's just a matter of updating or just checking correctly about the income tax declaration. We regularly do it every year.
Okay. And Oliver was asking questions as well, but we need more information. We need to know, Oliver, where are you contacting? What community you're in Spain?
If you own 3 properties at 300,000 euros each, then even as a non-resident taxpayer,
we need to know.
Still to pay what taxes on property worth individually? Yes, obviously. It's at the end you manage. You have to add all the properties. You are non-resident. You have properties in Spain. You add them all together. If it's over 700,000 euros individually, then the wealth tax starts to be obviously needs to be done.
But Pedro, he's saying he's got one in Madrid, one in Valencia community, and I guess he's talking about a no tax resident, correct? So he will be paying
non-resident.
So yeah, I
don't
know
if he's non-resident, I think he has to. We have to go to he has to add them all up, and then it depends on the region of Spain where the highest value of assets is. So he's got one in Madrid, one in Barcelona, and one in Andalucía. We've got to see where the highest value is, but then you've got to add up all of them together, and then pay conforming to that region. I think.
But the allowance, he's saying, Michael, over 700,000 euros, correct?
For non-resident, in Andalusia, there wouldn't be any. So if for example, the highest of the value is in Andalusia, then it wouldn't matter what the total value is. But if but
Comunidad Valenciana, which is saying yes, Comunidad Valenciana is over 700,000 euros for non-resident and 500,000 as a resident. That's the way it is at the moment. But we could do, Oliver, that simulation is needed, okay, to give you the specific answer. Right, we're going to wrap up. I'm sorry that we don't have more time. It's quite interesting, quite nice to have your feedback. Thank you, Nigel, for your feedback, and everybody for sharing your comments here. Michael, thank you for your time. Pedro, thank you for making it happen as well. Juanfran is going to share with us a nice video for those who wants to stay for 1-2 minutes. For those who are living, we will be seeing you hopefully in 2 weeks' time with more information about the law in Spain and whatever comes. Over to you, Juanfran. Thank you.
Buying a property in Spain. There are many reasons to purchase a property in Spain. The climate, the food, the culture, or simply to enjoy life. If you already see yourself buying the house of your dreams in the Mediterranean, it is important to be cautious and follow a series of steps. First, prepare a budget and take into account all the possible expenses. Remember to add transfer tax or VAT to the sale price, as well as legal fees, notary fees, and land registry fees. And even if it was love at first sight, do not rush or sign anything. The most important thing, especially if you're not yet a Spanish resident, is to hire an independent lawyer. A specialist who speaks your language and solely defends your interests. Together, you can review the characteristics of the house, should it have pending charges, negotiate a mortgage with the banks, and you will always be up to date throughout the whole process. But most importantly, fall in love with your property and do things by the book. Your new life starts there. Pellicer and Heredia, international lawyers.